Good evening, everyone. It's Chris from Solstice ATR, Axel. You can find us on the web, Twitter, Instagram, and Discord. Remember, we use this adaptive algorithm for side market, up market, down market. It doesn't matter what instrument you use. Remember to check us out, give us your commentary, hit the like button, smash it, let us know what you think. Remember, we're not a broker dealer. Our past performance doesn't give us any indication of our future results. Use at your risk, and data may not be copied without permission. You can check the website policy, get in contact with us. Let's go to the second slide. What I wanted to say to everybody, wish everybody season greeting, Merry Christmas, Happy Holidays. If you're not going to be around in the next week or so, if you're traveling, seeing people and stuff. And we want to say thank you for supporting us. And once again, enjoy the holidays. Last but not least, you know where to look for us. Give us your comments. Let's go to the first slide up here. I used to do this a long time ago, a couple years ago. What is the Goldilocks, the baby bear, mama bear, and so on. I have taken in from March 23rd of 2020 till the high of 2022 highs in December, and I measured this as a measured move. We can see where the 50% is. Usually we get a push up, a consolidation, a push up, a reset, consolidation, a breakout, and a reset. Usually the consolidation gives you the same distance you travel when you get a baby bear or a mama bear. These distances are usually identical. When we retraced in 2022, we came back to October 10th of 2022 lows. We consolidated. We had the December low and the March low. After the Silicon Valley, we rallied up, came back down, and we pushed up since 1023. You can see it's the same cycle as 1010, rallied higher. So we came out of consolidation, breakout, retested the consolidation, the upper level, and rallied higher, which we made on an annual chart, the combination of the S&P, Nasdaq, and the Dow, a new high for the year in 2023. But remember, we can continue higher or we can come back a little bit lower. It depends what the sentiment is, what the Federal Reserve Board going to do with the interest rates, inflation cost, global market economy, and the overall what's going on between Ukraine, Russia, Middle East, Israel, and Gaza Strip, as well as, China. Due to their real estate, they're going to be pumping more bonds into the market to keep the economy, and their outlook for the following year came in not as estimated $3.8 trillion. It came in under, they're looking for revised of 3.0. So we have to keep an eye on the global market in relationship to geopolitical. At the same time, what the Fed's going to do with the rates, if it's going to continue, stay stable till they calm down inflation, as well bring it back down in 2024. Let's pay attention to what the sentiment gives us. Let's go take a look at right now SPX, which is the Fortune 500 company. We can see where I usually put markers, and I've been doing this, and we can see where the Fibonacci between the high and low is, where the 50% is in the retracement of the consolidation. If I zoom in here, we created a rounded bottom and a handle. In order to finish this move in the S&P, we have to hold the July high, which is 4,600, at the same time to continue to the 4,800. And this is very important that we get the 4,800 reached before end of the year. Sometimes you tap into it. Sometimes we consolidate, get a breakout for the Christmas. We got the backside of the linear regression uptrend up here on the SPX or the SPY. Let's take a look at right now the Nasdaq NDX. And what I wanted to show in the NDX is a little bit different. Consolidation from the February 19th till the March 23rd. We got that big rally, consolidated, rallied up. We retested the 50% and the bottom end of the consolidation. We had the January, December low in October, shoulder, head, shoulder, rallied up, created a full cup, and we are testing the 2022 highs, which happened on 11/22. We are almost there. Pay attention to the uptrend channel. We can do a linear regression uptrend channel. We have to keep an eye on this channel up here, which is an open cone. Does it continue to this upside, to this area here? Do we consolidate and get a breakout by end of the year? When the cycle has another 12, 13 days to get a full moon. We are right now coming from a new moon to get a full moon up here. Does it continue higher or not? And the RSI, you can see we came in from a higher high. We created a lower high, tested the 50, broke back up and continued above the 74. Can the RSI continue all the way to 80? Of course, are we overbought? Sometimes it is when you get a big rally after the Federal Reserve Board, Jay Powell spoke on Wednesday. So let's keep an eye on an NDX. But what I want to do is the RUT, which is the small cap Russell 2000. We can see in the Russell 2000, we've been consolidating for almost over a year in this box. In order for the Russell to continue higher, we got to keep an eye on the 2028, 2085 for a breakout to get to the March 28 of 2022 prior year high in order to get a breakout. If it doesn't make it, it creates a shoulder here. That is okay. But pay attention to small cap because they are coming out of the woodwork. In the last couple of weeks, we had a nice rally. And if you take this distance from here to here, I can show you the rate of return on it. We can just do this and you can see it created a 23% yield in the market since that bottom that happened 4 weeks ago, 5 weeks ago. So if you brought the small cap, and I called it in the videos and told everybody pay attention to small cap is running a little bit higher and more efficient. So that's where we are in small cap. Let's take a look at how to measure a distance in the Nasdaq or S&P or Apple, and I'm going to call the New York Fangs, F-A-N-G. So let's take a look at the New York Fangs. Which is Nvidia, Apple, Amazon, Google, Netflix, Tesla. These are the companies and Microsoft that form the New York Fangs, which is the part of the Nasdaq 100, but are the top holdings in the Nasdaq. What I want to tell you is year to date, we broke up. The tech sector is a little bit more bullish than most of the sectors. This is the one that you have to keep an eye on in case the sentiment change and the rates do change. Do we get a continuation in the tech, or does money shift from the tech sector to other instruments such as mid cap as well as small cap and yielding bonds? So this is very important in relationship to gold. GLD has not done much. Everybody think that it has. After we called GLD at the 1600, which is GC, we called it up here. It rallied up. We've got a 1 top, 2 top, 3 top, 4 top. And I had called the prior week at this time. I said, be careful if it looks above and fail. So far, gold is coming back to a retracement. Keep an eye on F5 and F6 for a reset to create a shoulder to continue higher, or does gold fall back in? Very important. Let's take a look at the micro BT, because if I put the BTC, which is, I have a lot of fibs on it, a lot of levels, it's going to create micro BT. It kind of gives me a little bit less, noise on the right side, so you can see it more efficiently. You can see where the prior year high was to this low. We rallied above the 50. We cleared the 61.8. We cleared the 80%. Pay attention to the 78. There's a little tiny gap here in case Bitcoin resets and refills this gap before continuing higher, because this was the prior year high and this candle was the one that took you down. We have not cleared it yet. Pay attention to the sentiment and what Bitcoin does, as well as what the regulators do in Bitcoin. Let's go take a look at now micro NQ, and I want to break it. Micro NQ, and I want to break it down from the daily to the 4-hour chart. We're going to go daily just to show everybody where we are. We came out of that linear regression downtrend. We consolidated. We got a gap here, which we retested. Portion of it rallied up, and we created a new high coming out of that consolidation, that little flag here. out of a wedge and broke higher. So if I want to look at this distance in this week's range, what do we do here? So we're going to go intraday. The time frame that we're going to use is actually 20 days. We're going to use a 4-hour chart. And the reason behind it, I want everybody to see where the overnight are in relationship to trading hours. The overnight is basically the gray area between the Europe Asia market and the US is between the 9:30 in California or 9:30 in the East Coast, 6:30 in California till 1:15, 5 o'clock in the afternoon in the East Coast, while here it's going to be 2 o'clock. So if I look at the Nasdaq, this was last week's gap. You can see from Friday, this is where the low is. This is the high. If I want to go get a measured move, I'll get that bottom indicator. I've done some extensions on it. I'll show you how to look at it. I edit the property. I'm going to go one day back so we can get Sunday. We can see the ranges between -1 and +2. The reason why 0 to 100 and the extensions to the top, extensions to the bottom show you both sides of the ranges. So if I compress it, I know where the sentiment maximum pain is, maximum top gain is, because usually you get a reversal at the top or at the bottom. This is a runaway trend. Basically, we had a push up for 4 days, consolidated back down on Thursday. We had an inside day of Thursday as well as Wednesday. Pay attention to next week's range between this area and this area because you are inside those 2 days ranges in case we get a breakup or a breakdown, and pay attention to that small regression channel up here in case we lose the 80% coming back into the 61.8, then 50. If we end up going the other way, you look for the opposite side to the top. So this is how you measure the distance on any instrument by using the level, whether you use Fibonacci's or you use measured moves. At the same time, you can use channels and the RSI when it gets overbought or oversold at the bottom. Usually you can draw a linear regression uptrend or downtrend for the sentiment, and the 50% is the line in the middle. The 20% is at the bottom and 80% at the top. I usually use an 80-20. Most people use 70-30. Sometimes I use 85-15. That way I get a better range in the RSI or a MACD or stochastic. It doesn't matter. And I have a 50 and an 18 SMA to keep the long-term trend, whether I'm above a trend or below a trend. Usually when I get a reversal, the 50 is on the top, the 18 is at the bottom. When the bullish, it's the 18 on the top, the 50 at the bottom. So until they cross, usually get a bull cross or a bear cross. Don't be biased and trade what the charts offer you. If you have any questions, please let us know. We're here to help you. In the following couple of weeks, I'll do an asset allocation for 2024, different sectors, different stocks to keep an eye on for the coming year. Enjoy your weekend. Take care. Over and